Good morning, everybody. Good afternoon, good evening, whatever time you get to hear this or get to see this particular video. My name is Fortman, and I'm making this video for each and every one of you because I want you to be able to understand the logic behind advanced market structure. All right, so one of the things that we actually understand is that when it comes to the subject of structure, um, people understand the basics of market structure, but not many people are so exposed to the concept of advanced market structure. There are people that trade advanced market structure as a pattern, and many of them do not know the logic actually behind what they actually trade. So I want to bring to you the logic behind advanced market structure today, and I'm going to be introducing a few things as we go on. All right. So when we talk about the structure of the market, all right, when we talk about basic structure, you see that there's something we talk about that is called the structural environment. Now, under the structural environment, you see that price creates for us what we call either the bullish structure, where price is actually creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, all right. And there's also what we call the bearish structure, which is also under the second that is the second type of the structural environment. When the price begins to create lower lows, lower highs, price creates a lower low, creates a lower high, a lower low, a lower high, and a lower low. And this is just the basics of market structure right here. But you know, the concept of advanced market structure, the reason why I believe why people call it advanced market structure is because of the peculiarity of how price moves. All right. And the entire summary, I like to summarize advanced market structure into this simple term that everything advanced market structure is just price is just looking to attack liquidity. You know, so price is just looking to attack liquidity. Price is looking to move from one point of liquidity to another. That is the entire concept of advanced market structure. So that as simple and small as that word is, that is the concept of advanced market structure in its entirety. Price is looking to attack liquidity, that is move from one point of liquidity to another. All right, so by now we all know that there are only two types of liquidity, which is the internal liquidity and also the external liquidity. All right, and that is it. So which means that price moves from internal to external and price moves from external to internal liquidity. So now, because of how the basic introduces us, all right, to the concept of advanced market structure. So for example, if we have a bullish structure where price is creating higher highs, you know, higher lows, higher highs, higher lows, all right, and higher high right here. Right. One of the things I like to introduce to people is that every higher high in a bullish market structure, right, is going to be considered as an external range liquidity. All right, and every higher low will be treated as internal liquidity. So this higher high right here is an external liquidity. This higher high right here is also an external liquidity. But what we have here, this higher low is an internal liquidity. It's also an internal liquidity. So now, if we say that the concept of advanced market structure is to, we say that the concept of advanced market structure is to attack liquidity. Price is looking for liquidity to attack, right? Which means the price is looking to bounce off from one point of liquidity to another. What we are trying to talk about is that um, just like I just aforementioned, I said that every higher high here is going to be considered what an external liquidity. This is an external liquidity. This is an external liquidity, and this right here is an internal liquidity. This right here is going to be considered an internal liquidity. This is going to be considered an internal liquidity. This also is also going to be considered an internal liquidity as well. So what that means for us automatically is that we need to know that under the basics of market structure, every higher high is going to be considered an external liquidity. All right, and then we have what we call higher lows. All right, so every higher low will also be considered as what internal. All right, it will be considered as an internal liquidity. So we have these basic characteristics of under the market structure, the basics of market structure. So the last thing I want to actually introduce to us is that if every higher high is an internal external liquidity, all right, for every external liquidity that is taken, we want to see price give to us what we call the reversal. All right. And then for the internal liquidity, right here, every time price takes out an internal liquidity, we want to see what we call an expansion. So this introduces us to the other part of structure that many people don't get to know. All right. I teach people about the two sides of structure we have. We have the structural environment sorry, we have the structural phase. The structural environment tells us the type of structure that is actually building up currently in the market, which could be bullish, bearish, or consolidating. All right. And the second side of structure that many people don't get to talk about or people don't know is what we call the structural phase. All right. The structural phase tells us about the two types of phases in the structure, or two types of phase in the structure. All right. Which is the reversal and also what we call the expansion phase. All right. So what that means for us is that as much as we want to know the structural environment that we are actually trading. Another thing we need to know is that we need to know the face of the market we are currently trading. So what that means for us is that even when we are in a bullish environment where price is creating higher highs and higher lows, higher highs and higher lows. Remember, just like I said, every higher high is an external liquidity, and for every external liquidity that is taken is going to lead to a reversal. So this right here is the most recent higher high that got taken, which is also an external liquidity that got swept. Now, if an external liquidity got swept, all right, we said that or external liquidity got taken, it leads to a reversal. So this tells us one thing: we're in a bullish environment, all right, but we are also going to be in the reversal phase of the market. All right. One of the ways we get to know we're in the reversal phase of the market is that after this higher high has been taken, which is an external liquidity, we want to see price begin to give to us a reversal. Then price takes out internal liquidity and gives to us an expansion. So it is the internal liquidity once taken that gives to us an expansion, which means that when internal liquidity is taken, we are going to be trading the expansion phase of the market. But when external liquidity is taken, we are trading the reversal phase of the market. All right. So that is what I'm trying to introduce to us today. Now, I need us to also remember, like I said, every higher high is going to be considered an external liquidity. Every higher low is going to be considered an internal liquidity. So for every external liquidity that is taken, we have reversals. For every internal liquidity that is taken, we have what we call the expansion. So now this now brings us, so don't forget what I just showed to you. Now this brings us back to the concept of advanced market structure. So we want to look at the concept of advanced market structure. And don't forget, like I said advanced market structure just simply is price looking to attack liquidity. All right, price is looking to bounce off from one point of liquidity to another. And when I say price is looking to bounce off from one point of liquidity to another, this is what I'm trying to show to you. Under the concept of advanced market structure, there are two types. All right, so there are two types or two forms in which the advanced market structure can show itself on the in the marketplace. So we'll call the first one. Let's say we'll call the first one the type one. So if we have what we call the type one, all right, the type 1. So what is the logic behind the type 1? All right, so many people trade this particular pattern. They see a sweep of liquidity, a break of structure, price has created internal liquidity. Then this is a pattern that many people trade, all right, under the advanced market structure. So as much as this is a pattern, what I want to explain to you is the logic behind this pattern. You want to know exactly why price is actually coming to this particular internal range liquidity. That is what we want to know. All right. So under the concept of advanced market structure, we have what we call the type 1. So you will see that the type 1 can show itself like this in the market. You will see it starts with a sweep of liquidity, a break of structure. Now, the logic says that after the sweep of liquidity, the break of structure, this break of structure right here is going to be considered our first breakout. So the break of structure right here is going to be considered our first breakout. All right. And under the advanced market structure, it is the first breakout that creates for us your what? It creates for us our internal range liquidity. The second breakout is what creates for us our external liquidity, which also becomes our target. So when we see price take out this particular high, it's also price taking out an external liquidity. But at the same time, because of based on the context of what we're actually talking about, price taking out this particular high is not just price taking out an external liquidity. This is price giving to us a second breakout. All right. So we have what we call the second breakout right here. All right. And this right here, we have what we call the first breakout. All right. So the break of structure here is going to be considered the first breakout. So the logic says that the first breakout is what creates your internal liquidity. All right. First breakout creates internal liquidity. It is the second breakout that creates this second breakout above this high creates your external liquidity, which primarily becomes your target. So if you remember what I was showing to you guys, all right, under the basics of market structure, that every higher high that is being taken every higher high is going to be serving as external liquidity, and the moment it is taken, all right, we need to see a reversal. So this is a higher high that got taken, all right, which means that we're in a bullish environment, but we're going to be in a reversal phase of that bullish environment. So which means that external liquidity has been taken. We're most likely going to see price come like this, take out internal liquidity, then give to us what we call an expansion to the upside. All right. So the logic behind the type 1 of advanced market structure is that sometimes you see it form like this: a sweep of liquidity and a breakout structure. The breakout structure that happens here is going to be considered the first breakout, then the second breakout. This is the second breakout. So one of the things that is particular about the type 1 is that it gives us two breakouts. All right, we have two breakouts under the type 1, and we also know that the first breakout, I mean the two breakouts also have a purpose. The first breakout creates internal liquidity. The second breakout is what creates our external liquidity, which also primarily becomes our target. Now, this second breakout is not just a second breakout, it is also price taking out an external liquidity. And for every external liquidity that the price takes, we need to see that price is actually going to give to us a reversal. And after price takes out an internal liquidity, we need to see price give to us what we call an expansion to the upside. So there are times that you will see that the advanced market structure will start like this by giving to you a sweep of liquidity and it will give to you a breakout structure. All right. And there are also times that you will see just give to you most recent breakout to the upside. All right. And I've explained in some of my videos the difference between a breakout structure and a breakout. The breakout structure simply means the price is going to change its direction. Maybe we were bearish, now we have broken structure, there's going to be a change in direction. But the breakout simply means a continuation in that particular direction that has been created. So you can see under the type 1, you will see sometimes you will see what we call a sweep of liquidity and a breakout structure. All right. And sometimes under the type 1, you will see that price will just mostly just give to you most recent breakout to the upside. So you will just mostly see that price is going to give to you a most recent breakout to the upside. And the next thing you see price do is this most recent breakout is also going to serve as your first breakout. And never forget, under the logic is that the first breakout is what creates our internal liquidity. So after you have your first breakout, you will see that price is going to give to you an internal liquidity. Then price will create for you the second breakout, which also it is this second breakout now that creates for you what we call your external liquidity, which primarily becomes your target. So what we expect the price is actually going to do for us is this second breakout is also price taking out a higher high that serves as an external liquidity, which means for every external liquidity that price takes, then it has to be a reversal. And after the reversal, price comes back, takes out internal liquidity, and price continues to move to the upside. All right, price continues to move to the upside. So this validates our point when I was saying that the concept of advanced market structure is just price looking to attack liquidity. So if you look at the entire story from this type 1, I mean, these two stuff I just showed to us right here, they are both type 1. All right, it's just two different ways that the type 1 can actually show itself in the chart. All right. The first way is that it can give to us a sweep of liquidity and a breakout structure, where the breakout structure becomes the first breakout. The second way is that price will not give to us a sweep, price just gives to us a breakout, which is the first breakout, creates internal liquidity, gives to us a second breakout, which creates our external liquidity, which also primarily becomes our target. So second breakout is also external liquidity taking, leading to a reversal. All right. And that reversal is price coming to take out internal liquidity. And after price takes out internal liquidity, the price expands to the upside to take out what we call the external liquidity. So you will see that I said from the beginning that the concept of advanced market structure is just price looking to attack liquidity. Price is just looking to move from one point of liquidity to another, nothing more, nothing less. All right. Price is looking to move from one point of liquidity to another. So you can see from here, we took out external, reverse, took out internal, then we expanded to take out the next external liquidity. All right. Now, there are times that, I mean, there are people who would have questions because the market is never going to be picture perfect like this. But there are people who would have questions and say, what if we have something like this? Price gives to us a sweep of liquidity and a breakout structure. Price creates internal liquidity. The second breakout, after the second breakout, price begins to create consecutive higher highs and higher lows, higher highs and higher lows. All right. So people who have this type of questions in mind, this is a simple answer that I'm going to give. The logic under the advanced market structure still stands. If price gives to you something like a sweep of liquidity, and then it gives to you a breakout structure right here. All right. Gives to you a sweep of liquidity and a breakout structure. So what you are mostly going to see is that the logic still stands. The breakout structure, which is the first breakout, is still what creates our internal liquidity. All right. And after the internal liquidity is being created, all the consecutive higher highs and higher lows, higher highs and higher lows, higher highs and higher lows that are being created, all right, are going to serve as a trend line liquidity. All right. All of this will serve as a trend line liquidity. And one of the things about trend line liquidity is that it will serve as a magnet. All right. So this will serve as a magnet that is going to attract price. It's going to bring price to the downside. So let's just put this right here. All right. So what happens when you put metals close to a magnet, all right, there's a force that it uses to attract it. So even though you have the first breakout creating internal liquidity, the second breakout is supposed to create external liquidity, which is your target, and you expect price to reverse to take out internal liquidity, then expand and continue to the upside. There are times that price will give to you a sweep of liquidity and a break of structure. The break of structure, which is the first breakout, is what creates your internal liquidity. All right. Then price continues to give to you consecutive higher highs and higher lows, higher highs, higher lows, higher highs, and higher lows. All right. This doesn't change the logic that the first breakout is what still creates your internal liquidity. So you will see many a times in the marketplace, this entire trend line liquidity will serve as a magnet that is going to pull price to the downside like this. It is going to look like a falling knife. Then price will come back to this internal liquidity that is being created after the first breakout. Then price continues to the upside until this particular high right here is taken. The moment this particular high right here is taken, you can see already we have the concept of we have advanced market structure. We still have the type 1. So what we saw that price did right here is that all of these consecutive highs and lows, these lows right here serve as a trendline liquidity that is going to, like a magnet that is going to pull price to the downside. At the end of the day, price coming to the downside like a falling knife still came back. It's still going to come back to this internal liquidity that is created after the first breakout. So we have price coming back to this internal liquidity, which is the first breakout, and price continue to the upside. So when we want to interpret this particular chart, we can see that the concept of advanced market structure is still in place. External liquidity taking, price reverse, took out internal liquidity, then price expanded to the upside to take out external liquidity. So like I said, there are times you will see the chart, the type 1 of advanced market structure form like this, and there are also times you are going to see it form like this, right? Price is not going to give to you a sweep and a break of structure. Price is just going to give to you a most recent breakout. That most recent breakout is going to be your first breakout, creating internal liquidity. Then now let's say price begins to create consecutive highs and lows like this. All right. The moment price continues to create consecutive highs and lows, it doesn't change the logic behind it, that this first breakout right here is what creates our internal liquidity. The first breakout creates our internal liquidity. All of the consecutive higher lows are going to serve as a magnet that is going to attract price to the downside. All right. All of this will serve as a magnet that is going to attract price to the downside. So what we actually want to see that price is actually going to do is that we want to see that price is going to, come like a falling knife, then take out the liquidity created, internal liquidity created after the first breakout, then price continues to expand to the upside until, it takes out the external liquidity, which primarily becomes our target. So one of the things you will actually see right here is that you can see from here, like this is something you can see from here. So first breakout, internal liquidity, consecutive highs and lows, all of these highs, all of these higher lows that have been created will serve as they would all serve as, sorry. So all of these higher lows will serve as a trendline liquidity that is going to, pull price, to the downside. And the moment it pulls price to the downside, what we are going to see the price is going to do is come like a falling knife. So whether price expresses itself, whether the type 1 expresses itself like this with a sweep and a break of structure or most recent breakout, the logic still stands. That is the first breakout that creates internal liquidity. The second breakout creates external liquidity. So just in case the second breakout, price continues to give to you most recent breakout to the upside, which means price creating consecutive highs and lows. All right, the logic must still stand that it is the first breakout that creates internal liquidity. All right, so price comes back. So what is the interpretation of this? So you can see what price did here. It took out external liquidity. All right, after taking out the external liquidity, you can see how price reversed. All right, came to take out internal, and after taking out internal liquidity, price expanded to the upside to take out external liquidity. So I put it to you like to say that um, we want to keep trading as simple as possible, right? We want to keep it as simplified as possible, right? Which means that we want to make people understand that the concept of advanced market structure, because of the word advanced, right? It doesn't mean like something out of the ordinary. It just simply means, price is looking for liquidity to attack. Price is looking to bounce off from one point of liquidity to another. All right, that is that is the ideology behind the concept of advanced market structure. All right. So now when we talk about the type 2, all right. So this is everything you need to know about the type 1 and how you can use it effectively on the chart. All right. So when we talk about the type 2 of advanced market structure, the difference between the type 1 and the type 2, all right, this is the type 2. In fact, the type 2 happens to be my favorite. All right. This type 2 happens to be my favorite. The moment you understand what you are doing on the chart, all right, it's something that is very easy to spot. All right. And I'll tell you why the type 2 is actually my favorite, because it helps you to build your anticipation skill. One of the skills that every trader must have is the ability to anticipate. All right. And I always say it like this, that our trading stems from expectation to execution, which means that we always want to see that price. We want to see that if price does ABC, we are going to be executing XYZ. It's as simple as that. So under the type 1, the difference between the type 1 and the type 2 is that the type 1 has two breakouts, all right, and the two breakouts have a purpose that they serve. The first breakout creates internal liquidity. The second breakout is what creates your external liquidity, which primarily becomes your target. But under the type 2 has only one breakout. So you see the type 2 like this. The sweep of liquidity right here, the break of structure, it has only one breakout. So like I said, the difference between the type 1 and the type 2 is that the type 2 has one breakout, the type 1 has two breakouts. All right. But what makes them similar is the same logic. And what makes the similarity between the type 1 and the type 2 is that the first breakout is always what creates our internal liquidity. So you see price swept this particular low, give to us a break of structure, this break of structure, which is also our first breakout right here. All right. So we have the first breakout. Don't forget the logic. It is the first breakout that creates our internal liquidity right here. So first breakout is what creates internal liquidity, right? The moment internal liquidity is being created. Now, this is what makes the type 2 one of my favorite. This is what this is what makes the type 2 my favorite. All right. Now, like I said, the type 2 helps you as a trader to be able to build your anticipatory skill. All right. This is what I mean. So after the first breakout, we know that the first breakout is what creates our internal liquidity. So you see price create internal liquidity and price begins to trade to the upside. All right. One of the things you will notice about the type 2 is that as price begins to trade to the upside, you begin to build anticipation. If we break above this particular high, we have a type 1 already, which means we already have two breakouts, which is the first breakout, and breaking above this high becomes our second breakout. So we have a type 1. So, but this is how you build anticipation and your anticipatory skill, right? If price breaks above this particular high, all right, we have a type 1. But as long as price does not break above this particular high, which means that this particular higher high is still standing right here. As long as that particular higher high is still standing right here, all right, this higher high becomes your external liquidity, which also becomes your target. Then this internal liquidity that is created after your first breakout becomes your engineered liquidity. All right. If you have heard, many of you have heard the word engineered liquidity. So this becomes your engineered liquidity right here. All right. So like I said, the difference between the type 2 and the type 1 is that the type 1 has two breakouts, the type 2 has only one breakout. But what makes them similar is that the first breakout is always, they both have first breakout, and the first breakout is always what creates our internal range or internal liquidity. All right. So, like the reason why I said I like the type 2, like I aforementioned, is that after the first breakout and internal liquidity is being created, this type 2 helps you to build your anticipatory skill. All right, you know what to expect. So what one of the way things you know how to expect is if price trades above this particular high, it means we have the type 1 because now we have two breakouts. But as long as price trades close to this particular high and it doesn't take it out, right? This particular low, that is your internal liquidity, becomes your engineered liquidity. So what do we expect price is going to do under the type 2? We want to see that price is going to come back like this, take out the engineered liquidity, which is the internal liquidity, and price continues to move to the upside. So you will see that the cycle of advanced market structure is still complete. Like I said, the concept of advanced market structure is just to attack liquidity. So what did you notice that price did here? All right, first breakout created internal liquidity. All right, and price traded very close to this particular high. If it had taken out this high, we would have a type 1. But as long as price did not take out this high and it started to reverse, we want to see that price is actually going to come back to this particular low. Price coming back to this particular low is price taking out the engineered liquidity, right? That is the engineered internal range liquidity. Now, this is where many traders make mistakes, all right? And it is under the type 2, but they don't know. So you will see price gives to them a sweep of liquidity, a break of structure, which is the first breakout. Then price creates internal liquidity, and price begins to trade very close to this particular high. So there are some traders, okay, let me put it like this. something that every trader can relate to. So this is where many traders make mistakes. All right. Price gives to them a sweep of liquidity, gives to them a break of structure. All right. The break of structure creates the first break of structure, the break of structure, which is your first breakout, creates internal liquidity. Then price does something like this for them. So now many traders fall for this because they are actually looking, right? They are not paying attention to the entire story of this advanced market structure. So this is the first breakout right here. All right. This is the first breakout that created this particular internal liquidity right here. All right. And now, after the internal liquidity is created, as price began to trade higher, if price had taken out this particular high, all right, if price had taken out this particular high, we would have said we have a type 1. But price did not take out a particular high. So what many traders would actually be doing, this is where many traders get it wrong. They'll be paying attention to this particular low as internal liquidity. All right, not just internal liquidity. There are some traders, all right, who will mark out an order block right here, looking to sell or looking to buy from here. All right, and the funny thing about this is that price will trade into their respective zone, whether they are trading from this order block or they are trading from a liquidity right here. All right, so they are going to be looking at maybe price is actually going to take out as price is reacting from this other block, or price takes out this particular liquidity. Price would react, price will begin to go their way. Maybe their TP is just 1 to 3. Price will give to them like a 1 to 2.5, and one single candle takes them out, then continues in their respective direction. All right, many traders are falling for this type of trap. They didn't know that what they are falling for is the type 2 of advanced market structure. What I'm trying to show to us, they didn't know that what price is actually doing is price is reacting from the type 2 of advanced market structure. So, price react from their respective level where they were actually anticipating price to play out from. Price reacted from there, gave to them like a 1 to 2. Some of them would have gone break even. Some would have still left their stop loss wherever it was, only for price to take them out, and price continues to move in their direction. So traders are used to this word, your stop loss is my entry. So what they are trying to say is that, when a trader tells you that your stop loss is my entry, this is what he's trying to say. All right. For example, anybody who is considering to enter from this particular liquidity level here, his entry here, his stop loss will most likely be here. All right. But somebody who understands the concept, the logic behind the type 1 and the type 2 would actually understand that this right here is the first liquidity that is being created by the break of structure. So this break of structure creates your internal liquidity. All right. This break of structure creates the breakout, creates your internal liquidity. But as price continues to rally to the upside, and if it doesn't take out this high becomes your external liquidity, which is still standing. So you will see that both, whether this one or this one, the liquidity cycle has been complete, is now made complete already. So what did price do? We came to take out internal liquidity, expanded to take out external liquidity. All right, and price continues like that. So I want to move to the chart and show us some chart examples so that we can see what we're actually talking about. So just like on Friday, we had something very beautiful on gold, something very, very beautiful on gold, all right, which is something I want to show to us that happened on Friday. So if you look at this on Friday, all right, before the market closed, you will see what price did right here. So look at what price did right here, all right. Price started to create for us a lower low, a lower high, a lower low. Price gave to us a break of structure, all right. The break of structure created internal liquidity, then price traded higher. All right, this is a type 2, right? Very clear type 2. So look at what price did. The external liquidity right here is still standing. All right. So the external liquidity right there is still standing. So you can see that we had a break of structure right here. The break of structure, which is your first breakout. All right. You can see break of structure, first breakout. So that first breakout created our internal liquidity right here. You can see this is an internal liquidity that has been created right here. And look at what price did the next. All right. Price started to trade higher, but it didn't take out this high. Had it been now, if we had seen price take out this particular high, what we have is a type 1. But as long as price did not take out that particular high, all right, we have been able to build our anticipatory skill. We know that this is also still going to remain as a type 2. So what do we expect under the type 2? All right, we need to see that price is actually going to come back. All right, we need to see that price is actually going to come back, take out the internal liquidity, which is this engineered liquidity, And after taking out the engineered liquidity, look at where price rallied to on Friday. So price came back to that level at a specific key level right here. So, you know, the way we trade SLK, structural liquidity and key level. So if you look at this, we had a key level right here. All right. If you move to the line chart, you can spot the A-shaped key level that got disrespected. So price came to attack liquidity, mitigated the key level, and look at what price did. So you can see the liquidity cycle is complete right here. All right, internal liquidity was taken. We expanded to take out external liquidity. This is very beautiful. All right. So there are a few examples on gold that happened last week. In fact, this major sale that happened here was under the type 2. And this is why I said I love the type 2 a lot. So when you look at this second chart example, you can see from here we had a sweep of liquidity right here. All right. After the sweep of liquidity, you can actually see what price did right here for us. We had this lower low, we had a lower high, we had a break. All right. So we had this first break. So I want us to pay attention to the entire detail of what happened here. All right. You can see what happened. So after the break, all right, you can see from here, price created the first internal liquidity, traded lower as if it was coming to take out this particular low, but it didn't. All right. So look at what price did. So this, as long as this particular external liquidity is still standing, all right, this high right here, that is the internal liquidity created after the first break, becomes your engineered internal liquidity. So look at what price did. Price took out the internal liquidity, all right, came here, took out the internal liquidity, it dropped, but still did not take out this external liquidity. But as long as price did not take out the external liquidity, our engineered internal liquidity is still going to be this particular high. So look at what price did again. Price came, look at this. This is the type 2. Price came, took out the internal liquidity, it dropped, but it still could not take out this particular low, which is our external liquidity serving as our target. So our external liquidity is still standing. All of this is just price being trapped in a particular phase. So we have a key level right here. That is a V-shaped key level that got disrespected to the downside. So which means that as long as this particular low, this external liquidity was not taken, our engineered liquidity is going to move from this one to this right here. Look at this. So look at this. So price took out price now took out the engineered internal liquidity, mitigated the V-shaped key level that got disrespected, and look at how price dropped. All right, from there. Now along the line, you will find out that if you have watched my video on this same YouTube channel, if you watch my video on how to use confirmation entry effectively, I did some series. I did a teaching on that, how to use confirmation entry. All right, so you can see the moment price came right here. All right, the moment price came back, took out the engineered internal liquidity, went for the external liquidity. The liquidity cycle of advanced market structure is now complete. Internal liquidity has been taken, price expanded, took out the external liquidity, then we had a little bit of reversal. Then that reversal gave to us what we call the confirmation entry. And I've told us the concept behind confirmation entry. I want you to go and watch the video I did. All right, make reference to that video on confirmation entry. It's going to help you a lot. In fact, most of the trades I took last week all came from confirmation entries. All right, from gold, German 40, you know, whatever it is, they all came from confirmation entry. So you see the confirmation entry, price took out this particular high. The logic behind it is that price takes out a particular high, the low must still be standing, because that low that is still standing must be your opposing liquidity. Then when you move to the line chart, you will see that price now has already created for us an A-shaped key level. All right. So look at what price did. We swept the high of this 30 minutes high. The 30 minutes low is still standing. Price came back to the V-shaped key level, the A-shaped key level right here. And look at how price just continued to drop. And you would always find multiple examples. You would find multiple examples. And this is something you can use effectively. I mean, you can use it effectively week in, week out, day in, day out as you trade. All right. It just makes your trading get better. You improve in your trading approach, and it becomes systematic. So I hope you found this valuable, and I want to see your results. You can share with me, and you can also join the Telegram channel, all right, to gain access to other materials that we have shared in time past, and also join a community that is really amazing. Until next time, have a good evening.